I mean, step one is it might seem kind of obvious, but after you connect with those operators and syndicators or sponsors, it's building that relationship and then hopping on their investor portal or their
Mhm,
website and then
mhm.
signing up for their mailing list, generally mailing list, and just kind of their email communication, because that's going to be the best way that they can start feeding you deals and opportunities. And that's the best way for you as a limited partner, for example, to start reviewing those deals. So
Yeah. For all the new viewers out there, welcome to the channel. I'm Sherwin. That's Tyler.
I'm Tyler J.
Yep.
Yeah, so episode 7, the previous one, the recap. I mean, we
Mhm.
were kind of talking about how to get started into the real estate syndication space. And so this
Yes.
this chapter of our videos is really going to be focused on the syndication space. So
Yeah. We sort of started this kind of a syndication chapter series in our channel where we first talked about what is a syndication and how do I get started in a syndication. So if you want to go back to those previous 2 episodes to check out, that would be great. But now this one is sort of like the next step. It's like, okay, found out what a syndication is. It's great. I want to learn more. I found out how to connect with a sponsor or operator to get started in real estate syndication. I'm on their mailing list. I'm getting all these deals emailed to me. Now, how do I actually take action? What's the investment process? And this is what this episode is all about, right?
yeah, well, I think you may have gone ahead a little bit, but the first step, really, I mean, we're laying out 5 steps here, basically, on kind of
Yes.
what that whole process looks like. So, I mean, step one is it might seem kind of obvious, but after you connect with those operators and syndicators or sponsors, it's building that relationship and then hopping on their investor portal or their
Mm-hmm.
website and then
Mm-hmm.
signing up for their mailing list, generally mailing list, and just kind of their email communication, because that's going to be the best way that they can start feeding you deals and opportunities. And that's the best way for you as a limited partner, for example, to start reviewing those deals. So
Yeah. Well,
step
what
one, just sign up and connect with those operators through that digital platform and get on their email communication.
Yeah, that's a first step in this five step investment process. And it's funny, I get a lot of questions from investors like, well, how do I sign up for the portal, or how do I get on the mailing list? And we talked about it, a little bit in the last episodes. Look online, connect with me, connect with Tyler, and I have my company Flight, and I usually our workflow, not every other syndicator's out there workflow is a little bit different. I usually like to make a connection with an investor and feel them out, see if they're a good fit, and then I'll send an invite to the portal, and then they're on their mailing list. And a lot of people think mailing lists are bad, but what I tell investors, especially new ones, new to syndication, is even if you're not ready to even if you're not ready to invest right now, get on the mailing list. We'll send you updates. We'll send you offering memorandums. I'm getting ahead of myself. We'll send you deals. We'll send you market updates and so forth. And at the very least, you'll get used to the syndication process.
Mm-hmm.
You get your feet wet, learn the jargon, anything you don't know about. I tell investors, email me, contact my team, and ask the questions. And we're here to help out any way you can. That way, when you're equipped and ready to invest in a deal, you already know you're good to go. You've seen these
Mm-hmm.
OMs, you've seen these updates, you're good to go. And I'm ready to go. Whether this is 6 months down the line, a year down the line, 2 years down the line,
5 years down the line, you
5
never
years down
know.
the line.
Yeah.
Yeah. So it's point, just get in contact, sign up for an investor portal, and get on their mailing list to receive these contact communication. That's step one, right?
Yeah,
And
I
then,
think the point you brought up too is it's not like you're signing up for a target mailing list where you're going to be spammed with all these products for 50% off. It's like, generally these sponsors kind of know it's not a salesy tactic. It's like, let's provide value. Let's give you updates. Like, let's show you what we're all about and
yeah,
get a vibe, kind of give the investors a vibe. And yeah, I mean, it's probably very useful to look through a couple OMs or offering memorandums before you pull a trigger on anything, really.
yeah,
So
yeah. And
just get on those mailing lists. That's the first
yeah,
step.
and that's a good segue to step two. We've been talking the OMs, or what we call as the offering round, because as soon as you sign up for a syndicator's investor portal or on their mailing list, you receive regular emails and communication. And part of the emails and communication you'll receive or should receive is, potential or current investment opportunities to review. And that's usually comes in the form of what we call offering memorandum, or OM for short,
Mm-hmm.
which is I always I guess my best description, or you can I may bastardize it a little bit, but it's sort of like a pitch deck
Yep.
of the property that we present to an investor. It has images of the property, some photos, our business plan, the strategy and potential returns and so forth. So we're going to go through it a little bit more in detail, and and it's for the investors to sort of review, take a look at it, and make a decision whether it's a good investment for them or not. Is that sort of
Yeah, no, I
anything
mean,
you can add to that?
that's a good example and a good explanation of what a OM is,
Mhm.
and we'll tease this. We're gonna go actually probably go through another episode later down the line. We'll go through an OM, which I think is super valuable for anyone that wants to be watching through this kind
Mhm.
of process. But yeah, it's for me, I love looking at OMs, man. It's like
Yeah.
seeing the market, seeing the purchase price, seeing the construction budget, seeing what all the fees are, seeing what the projections are on income and what you're going to be able to bump, NOI up to, and then what's your exit price. There's a lot that goes on to it. It's pretty much a business plan for the property. And then, yeah, it shows you everything from kind of the market analysis to the
Mhm.
bios of the sponsors. And it's a full-fledged kind of, usually 10, 20, 30 page kind of pitch deck,
I've
as
seen
you
I've
said.
seen 100 pages before.
It's crazy. Yeah.
Oh,
Yeah.
we've as a company, Flight. Oh my gosh, you can see like our first OM to where we're at now, and we 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 change from time to time because we
Hmm.
listen to investors. It's great when we have investors like you, Tyler, too. I remember we sent an OM to you, and you had all these questions. I'm like, we should be answering these questions already in our offering memorandum.
Hmm.
Investors shouldn't have to ask that. So it's a good kind of I guess give and take, and trying to figure out. It's hard to encapsulate a document that will satisfy everybody.
Hmm.
So we're improving, we're changing every time depending on the property, depending on the deal. And as you mentioned, like I mean, for Flight itself, for my company, what you'll see in our one usually, like you mentioned earlier, our bios, sometimes our track record, where you can see that on our website, investment highlights, property overview, financials, the business strategy, investment options, sort of like the preferred return and the split. We'll go more of that later on. Just kind of like a general overview. Maybe we'll do some, especially like market analysis, depending on the deal where it's at, and as I mentioned earlier, like a portfolio or track record. And that's sort of, I mean, every sponsor and syndicator is going to have different information on the OM depending on the deal and depending how they run their business, right? So
Hmm.
yeah.
Yeah. So, I
And
mean, I guess step three is,
well, before that,
oh, okay.
well, we forgot to mention, in addition to the OM, a syndicator may also have a webinar. That's
Yes, yes,
yeah.
yes.
So usually we'll get the OM out, and then it'll be followed up with a webinar to sort of go over the offering memorandum, and investors will hopefully join in and ask live questions. And even if you can't join in, what we do is we send a recording of the webinar out to investors. They can watch at their own free time, and from then they can email us questions about the deal to see if
Hmm.
it's a good fit for them or not. So
Yeah.
that's step two. Kind of review the OM and check out the webinar and kind of analyze this. And Tyler mentioned
Ask
we're going to analyze
questions.
this. Yeah, we're going to analyze this. Is probably like another episode, kind of going over an actual offering memorandum, what to look for, and what to review and analyze and so forth. Right.
Yeah.
So.
Yeah. So I guess, and then hopping over to step three, once you kind of, from an investor standpoint, made a decision on, okay, I still want to further pursue this property and be an investor in it after reviewing the OM and the webinar. It's to basically, a lot of, I think, syndicators go this route. It's they kind of collect and take soft reserves, we'll call it a soft reserve.
Mhm.
Basically, it's not saying that you're 100% locking yourself into the deal, but you're
Mhm.
showing, again, further interest
Mhm.
where more documents and kind of ability to review the deal will kind of come into handy at that point. But yeah, I mean, any notes on what a soft reserve is from your end, Sherman?
Yeah, like, I mean, there's a lot of people call it soft reserve, soft commitments, and I mean, you said it right. Like, if you review after you review the OM, you're like, yes, I'm interested. And a soft reserve is an expression of interest.
Mm-hmm.
You're it doesn't guarantee you a spot on the deal. What it does guarantee you, or for us, as far as our workflow and process, is that it guarantees you that we'll follow up with everyone on the soft reserve list or soft commitment list, and place them on this list where they can continue on to the next steps and
Mm-hmm.
receive kind of a subscription documents. which is sort of like the next step. But before we get to, but it's sort of like it's a way for us to follow up with everyone that software reserves to take us to the next steps before we get firm commitment. So it's free. I mean, if you want to see more information about it or actually go through the whole syndication process, I encourage you to just click the soft reserve list, get more information, and kind of go from there. But if you really know based off the offering memorandum, it's not a right deal for you, then don't reserve or don't commit. But that's sort of what I mean, that's pretty much what the workflow of most syndicators, or not everyone, but I know you work.
Yeah, I mean, I think it is important because especially if if you're getting to the point where, like, I worked with some partners in Phoenix who are now doing very well, and they have a lot of investors that want to invest, and
congrats.
And thankfully for them, there's people that will just they don't feel like they have to do a lot of due diligence. They just say, hey, here's my money, invest it. So if you're in a situation where maybe there's a high demand asset that's being offered, put that soft commitment in, because you never know, you may not be able to get into that deal if they already have enough, capital raised. And also maybe on smaller deals where there's less capital needed. Like I know you're doing a smaller deal right now, Sherwin, where there will not be as many investors needed. And so let's say, you've raised all your capital in the first 10 to 12 people. Well, then if you're number 13 or 14 and you didn't put that soft commitment in, well, you're out of luck in that case. So
no, that's a good point, because on the GP side, on my side, on the general partner side of the deal, the soft reserve is important for us as well, as because we can sort of gauge interest on a property. Say if we're raising $1 million, we have a soft reserve list of 1,500 or like 1.5 million raise. We're like, oh, good, this is a good deal. People are expressing their interest, and it's a good point, because a soft reserve is an opportunity for us where we ask the investor, how much are you interested to invest in this deal? Sometimes our minimum usually from 25 to 50K. So we're like, okay, Tyler goes fill out soft reserve, and he's, I'm interested for 50K. That's great. We put on the list. So us on the GP side, we can tally this list. We can look at, oh, okay, everyone's pretty interested for a total amount of $1 million or 1.5 in this deal, and so forth. But to your point, I don't know if how you guys do, or other syndicators, you said you're kind of like down the list if you're number 14. For us, the order of when you soft reserve isn't really that important. You can be the first one, you can be the last one, just to get on that list. Because for us, our workflow is really, I mean, we're stepping ahead, but it's once you actually wire the funds.
Wire, yes.
Yeah, but we're jumping ahead. But the main point is, like, it's good for us, the GP, to know this, because we can gauge interest. We know how much capital is interested in this raise, and thankfully, gratefully, like all our deals, we tend to oversubscribe on the soft reserve list, which is great, because anything can happen, because people could pull out last minute from the deal, or change mind, and so forth. So we always encourage people, just get on this, and hey, is the soft reserve list full? It's never full. We just say a term we use is oversubscribe, but that doesn't mean you can't just continue to the next step to reserve the soft reserve, go to the next steps of the deal and so forth.
Yeah. So, no, it's a good gauge, like you said, on the GP side, to figure out if, hey, maybe we need to do a little bit more work on the capital raise side, or maybe we need to do another webinar to try and clarify some questions, or maybe we didn't, present the deal in the best manner, where people are just, questioning everything that we presented. So
yeah,
it's a good gauge for both sides.
Yeah. Is this a good kind of segue also to talk about, we mentioned during the soft reserve, the investors let us know how much they like to invest in the deal, and also I guess money sources. How do they source? How do investors sort of source their money for the deal? Because the most obvious way is like cash from saving, right?
Yeah, I think a lot of people, especially if you're newer into the syndication world, you don't necessarily know all of the ways you can actually fund. I think when I first got into this world, I just assumed everyone was, funding their deals and investing with savings, like just straight cash from your savings account.
Yeah.
But as I got to learn this world a little bit more, there's other ways. And so it's obviously you can fund via cash. You can also tap into your retirement accounts if you have like a self-directed IRA or a solo 401k. You could even use a HELOC if you have one to fund, and invest in these deals as well. So there's more than just one option in terms of how to fund the deal.
Yeah,
I think actually needs to be communicated a little bit more, even on offering memorandums, because again, a lot of these OMs just say, okay, 50K minimum. And then, investors are like, I don't have 50K sitting in my savings right now, or whatever it may be, So knowing that you can tap into your retirement or a HELOC, like those are other sources of of funding that you can tap into.
Yeah, and there's always ways. Just because the minimum says 50K or 100K, talk to the sponsor. I mean, we tell investors. I had investors talk to me and like, hey, Sherwin, I really want to invest in a deal, but I can't do the 50K minimum. I can maybe do only 25K. And my response is usually, it's a case by case scenario, but our recommendation is usually, why don't you ask a family member or a friend to maybe go in on this deal with you to meet the minimum. Maybe both of you guys go 25K, but maybe Tyler, you're the only main point of contact, or we could treat you two separately depending on the amount of investors. We're just trying to limit our the amount of investors we manage, especially if it's like a huge raise. We $1 million raise. We don't want like a bunch of $10,000 investors. I mean, it'd be great, but then we got to manage, what is that, 100
more people,
whatever,
more people, more questions. It's kind of, it's a customer service role in a way.
So if you see an OM, the minimum's not quite it's too high. There's always flexibility. Talk to your sponsor, especially if you've been a repeat investor in past deals where you have money locked up in other deals. There's always it's always flexible. It's just a conversation. Just ask the question. It doesn't hurt to ask, but but like you said, it's a good way to kind of strategize and plan for for future deals. Like, okay, the minimum is usually 25 to 50. I got to figure out whether it's from 401k or savings, a lines of credits, or whatever to sort of fund this deal. Right? So.
And I've also, on that point, like, just the bottom line is talk to the sponsor, see what you can work out. Because I've also seen a tactic where there's kind of like a wait list, we'll call it.
Yeah.
Where maybe you can't, commit 50K, but you can go in at like 35K and you're on the wait list. So like if they need some extra capital at the end, and they'll kind of pick from that wait list crew that doesn't necessarily meet the minimum. But the bottom line is talk to your sponsors, talk to your syndicators, and just, I think you learn as you get older, like almost everything in life is negotiable.
Yeah.
And so just ask the question. Worst case is they say, no, minimum 50K. Sorry.
Yeah. And it could be deal specific. We may accept a less than minimum one deal, but maybe not another deal because maybe we're just so oversubscribed.
Yep.
And that's a great point. We've done that before. We put less than minimum on the wait list, and if there's a last minute someone pulled out, hey, Tyler, you're on the wait. Hey, if you're in, you're in. We got you a spot. So that's just so important. And like you said, just get in there. It doesn't harm. There's no harm, no foul, as Chick Hearn said.
Yeah. So okay, let's say you've reviewed the documents. You're all in. You're putting your soft reserve. You're ready to move forward and wire money. So the next step is kind of reviewing those last few documents, which, frankly, there's a lot to read through, and if you're new, I would read through all, as much as you can with all the legal language and everything. But I think there's like three main things. There's the PPM, the private placement memorandum.
Yes.
There's the OA, the operating agreement. And then there's the subscription agreement, which is we'll call it the SA. But those are, I think, the three big documents that you would review from a investor standpoint.
Yeah. Usually, that's what we tell investors. Just once they sign up for a soft reserve list, then they can go on to the next steps to review and sign the offering documents. But they can't get to that step unless they sign up on that soft reserve list.
Yes. And some people will ask for the PPM right up front, and I'm like, nah, not yet.
Yeah.
Like, show us that you're actually interested,
Yeah, and sometimes we're doing it. I mean, as far as our workflow, we're doing things concurrently at the same time, right? We have the OM. We just sent that out. We're getting interest, but then the same time we sent the OM, we're working on the subscription documents with our lawyers, and so it's all happening all at the same time. So the subscription maybe will come a week later after the soft reserve, or depending on the timing of the deal and so forth. I mean, that's just another episode too, to sort of review the subscription. And it's a lot of it's a lot of
information,
legal,
man.
It's a lot of legal jargon. I mean, just in general, the PPM, I guess. Do we want to go to each one or no? I don't know if you want to.
I mean, you can probably describe it better than me. I've read through a number of them, and as on the GP side and the LP side, but there's a lot of jargon, and I would always, first of all, say we're don't take legal advice from us, but I would always recommend reading through every single document that you're going to sign.
Yeah. I mean, the PPM, the private placement memorandum, is sort of like a disclosure document. It describes the structure of the company, how the company is operated and managed, risks of the investment, and projected distributions to investors, and so forth. That's what the private placement memorandum. The operating agreement, or the OA, is the agreement that describes the duties of all the parties involved in the transactions, and such as investor distributions, bylaws, voting rights, and fees collected by sponsors. Sort of like the operating agreement of how to operate this particular investment. And the last
And on
one,
that
yeah,
note too, Sherwin,
yeah,
like generally, I don't know if you're a limited partner, you don't really have, the good thing is you don't have a lot of responsibility,
no,
but
no,
you
yeah,
also
yeah, yeah,
don't necessarily have many rights to dictate how the deal works, which is again
no,
a good and bad thing. Like that's what you're signing up for. So
yeah,
if you're coming in as a limited partner, just know that you're not going to really have much influence on how the deals run. But again, at the same time, the whole point of that is really to trust in experts that are actually, full-time real estate. They're experienced, they have a track record, and they're putting their blood, sweat, and tears into these deals.
yeah. That's why it's great to, you got to vet these sponsors, and that's another great episode we got to do. Start vetting sponsors, because the GPs are the ones that are in charge of all the major decisions of the property. That always have the investor's best interest in mind.
Mm-hmm.
But the LPs don't have, like, as a GP, we can decide when to refi, when to sell, which properties to rehab, all the major stuff. But like you said, the benefit of that is the LPs, or the limited partners, don't have to worry about any of that stuff. That's what makes it so passive. They don't want to
Mm-hmm.
manage properties. They're out busy living their busy lives at work or with their family, and so forth. So which is part of the benefits of a syndication. And the third one, you talk about the subscription agreement, and this is just sort of like a questionnaire for the investors, sort of to certify they meet their qualifications and the and suitability to invest in a particular offering. So, Tyler mentioned we're not lawyers, review these documents, but that's kind of like a quick kind of overview of the PPM, sort of like the overview of the company, always sort of like the overview of how we're going to operate this particular investment. And the essay is sort of like an investor questionnaire, getting to know the investor a little bit more and their kind of investing background.
Mm-hmm.
So,
and then, just the last part on the subscription agreement, got some notes here on kind of, it's a document for investors to certify that they meet the qualifications and, suitability to invest in the offering. But yeah, I think, that's why it's important to have a relationship with the sponsor or, the GP group, because maybe technically this could be your first real estate investment. But if you've been able to kind of, number one, establish a relationship with the sponsor already, or maybe you're a family or friend, or, and you've proven that you have shown some business acumen, and maybe the stock market a little bit, maybe you run your own business, small business, like it's really, it's an opportunity to make sure that, both sides fit well together. So that's just my little note there.
how do you I know you've invested in a lot of syndications, both as a GP and LP. How do you guys usually how do you usually send out these subscription documents to your investor, or how have you received these documents
Yeah,
from investors
I
or
think it's,
sponsor?
I need to remember, but I believe it's just like through the online portal, and then you just kind of DocuSign them basically. I
Yeah,
don't remember if it's a direct email to the investor, or if it's go on to the portal that then like click a link and download / review it on DocuSign. I forgot how it was actually distributed.
yeah,
But there has to be some security behind that too, because it shouldn't be going out to just anyone. So I think
no,
I forgot if it was through the portal, or if it was just once it was very clearly defined that you wanted to invest, we'd send it out to you individually.
yeah. Our workflow at Flight, we usually send it out through our investor portal. It's
Yep.
a little bit more secure that way, and they can, it's usually an email. They
Yep.
click a link where they can access and review it and sign through the portal. It's
Yep.
almost like a DocuSign. We use like a
DocuSign,
HelloSign.
yeah,
A
type
lot
of
of
thing.
people don't like that format, but it's one of those things. And if they request it, or sometimes we also do, we'll send out the files individually so they can review it on their own, or maybe they have to send it to their lawyers or send it to their solo 401k provider because they want to review the documents as well. But usually it's through an email. There's a link to access the document somehow. Same with the soft reserve, the previous step. Usually we have a link in the email that says, hey, click here to be on the soft reserve list. So it's pretty easy, pretty seamless. And don't worry, a good investor and a good sponsor will walk through these steps.
Yeah, if they've done multiple deals at this point, they
Mhm.
should have learned through kind of what their investors need and want. And
Mm.
every deal, I'm sure when you're kind of fine tuning everything from whatever what the timeline looks like, how you present offers on your OM, like what the portal kind of user interface is, all
Mm.
that kind of stuff. So,
Mm.
again, if you're investing for the first time, definitely recommend going through someone that's been doing it for years.
Yep.
Unless it's a close friend that you just like super trust, and you're like, hey, let's just do this together. It's our first deal. Let's just do this.
Yeah.
But to kind of mitigate some risk, I recommend going with someone that has a track record.
Yeah. No, that's a good point. Okay. So
Um,
so
yeah.
once you sign it, what happens next?
Last piece, man, is send that money. It's wire over that money. I guess you could probably even also send a check, but I think everyone's doing wires these days. Um,
what's a check, Tyler? Actually,
well,
you should be asking me that question, because I back in my day I
you
used to
used to have
write.
checks back
I
in the
used
day.
to
I
there's
actually
a
have some
there's
checks in
a
my closet.
it's good to have.
But yeah, I mean, it's wire the money. I mean, at the end of the day, right? Like the GP group is reaching out to investors, and investors are investing with the GP group, and it takes capital to close on these deals. It's the
Yeah,
down payments, the renovations, the closing costs. It's all this. So
yeah,
the money has to actually be, transferred over.
yeah. And for us, the way we communicate it with our investors is once they sign the offering documents, they automatically get an email to receive wiring instructions of where to wire their money to finalize their spot in the deal. And we tell them, once your wire is confirmed, then you're confirmed in the deal. Your spot is reserved.
Yep.
And that's sort of like the order of, I guess that's how important the order of wiring your money is, because you could sign the documents, but if you take, I don't know, a couple weeks or delay their wiring your funds for whatever reason, you could be waiting for other funds coming in, you're just not ready, or just kind of it's just you forgot about it. Once we're fully funded with the wires, with the hard wires, we call it the hard wires, then the deal closes and you may lose your spot in the deal and you get put on the wait list if someone. Well, I mean, once it's wired, usually 99% nobody takes it back out, hopefully. But there's situations maybe someone pulls out, but you're on the wait list anyways, and we'll contact, hey Tyler, if you're so interested, the deal, there's a spot available and so forth. So that's what we tell investors, hey, once you sign the documents, that shows us you're fully committed, you're serious about the deal, and the last step, wire your money to confirm your spot.
Yeah, and then I don't know if you mentioned this, but there's always pretty clear cut timelines too on like it again, being very transparent from the GP side. It's like, here's the soft commit deadline, here's the signed documents deadline, here's the wired deadline, basically.
Yeah.
And so you should have that all down in your calendar as an investor.
Yeah, and what we do throughout this whole investment process is we continually send email updates, about the property, about markets, about if there's updates that happen during this. This is sort of like the escrow process of the syndication deal, right? If you go into escrow of a property, and you're kind of working your way and finalizing your spot in the deal. So those are the 5 steps, right? Kind of want to review a little bit. Let's going
back to the 5 steps. Why don't you kick it off there, Sherwin?
Yeah. So step 1, sign up on that investor portal to get communications from that sponsor or operator, right?
Yeah. Step 2 is review the offering memorandum / be sure to participate and watch that webinar where you can ask questions.
Yeah. And then once you see an offering memorandum or property that you like, step 3 is usually take action and get on that soft reserve, soft commitment list so that you can proceed to the next steps.
Yeah, once you kind of figured out how you want to fund the actual investment and you are even more fully committed to the deal, next step 4 is review and sign the offering documents. So that would be the PPM, which is the private placement memorandum, the operating agreement, and then finally the subscription agreement.
Yep. And then once you sign this agreement, that's another step of committing yourself to the deal. The next step, you usually have instruction to wire money to finalize your spot in the deal. So that's the last step. So five kind of I mean, we've compressed it to 5 steps, but each step is we could probably analyze, especially step was it 2, we're reviewing the OM, which I think
that's a big one.
We talked about we're gonna do a walkthrough of page by page turner, probably just going through OMs and kind of reviewing and showing investors what they should look for, what's important, what's not, and so forth. But yeah,
honestly, one of my, I guess the things I really enjoy is literally looking at deals and OMs. I don't know, something about just running the numbers, seeing how the business plan is built, looking at the budget, looking at what the projections are.
Yeah,
I love doing that stuff just for fun, man.
Yeah. Back in my W2 days in architecture, my job was we used to do these PowerPoint presentations for clients. Our job was to communicate our design concept and to the client. and we do these presentations through these PowerPoint or slideshow presentations. In a way, the OM is sort of similar, and this whole process is sort of similar, that where we have to communicate to the investor the deal, the benefits of the deal, the risks involved, and why it's such a good deal to invest in. And that's part of the deal, just good communication between the sponsor and the operator, and sponsor and the investor, and kind of go from there and build that relationship. And just take that first action, sign up on the investor portal, and like you said, get OMs.
Yep.
Reviewing it. Get OMs from different operators, get on their mailing list, and just review different ones. And pretty soon you'll be an expert of reviewing these offering memorandums, and you're good to go. Even if you're not even ready to invest right now, it's just good to know the real estate jargon in the syndication space. And that's one way that you can financially educate yourself, besides watching this YouTube channel.
Like and subscribe. So Sherwin, I think one question that I think is a really good question that I don't know if people always ask this, but it's a good topic starter.
Mm-hmm.
So my question to you and myself is, what's more important, the sponsor or the deal?
Oh, you don't like my answer. Everyone goes, it depends. No. You want me to go first, or you want?
I'll have you go first. I think we're gonna have a similar answer, but I think it's just, I'd love to hear your thoughts on that, man.
Yeah, it's not an uncommon question. I've heard this question a lot in the syndication space. What's more important, the sponsor or their deal? And for me personally, the sponsor is more important than the deal. Not saying that the deal is not important at all, right? If it's between sponsors, I think the sponsor is important because, and when we say sponsors, operators, they're the same, or general partners, the people in charge of executing the business strategy so that you can get the returns that they projected in the offering memorandum. Because real estate and the syndication business is a relationship business, like any other business, but especially this space where you're trusting someone with your hard-earned money. And at the end of the day, you got to like that person, and you got to trust that person that you're giving your hard-earned money to, and hopefully, return your investment back to you and then some, right? So I think it's very important, because the deal is going to be there. Mm-hmm. And it's very careful. We're talking more in the offering manual. The sponsor can flash, it's a marketing tool, can flash any numbers you want to see. Hey, what IR do you want, Tyler? Plus 20%?
Give me 25%, Sherwin.
It's great. We show 25.6%,
We got
but then this is where we're going to analyze in the future episode of kind of like digging into these numbers. But that's why I think it's important. Part of our workflow too is whenever someone signs up on our portal or emails me or contacts me through LinkedIn or Twitter or whatever platform, shoot them an email. Hey, we'd love to get on a call with you, just to get a feel of each other. And that's sort of important because, it's easy to get a Zoom call, especially these post-pandemic days, like this is just getting that visual connection, So, and if you can't do that, just through emails back and forth, you can gauge a relationship between that, get to know the sponsor, get to, figure out if it's a good fit, and so forth. So for me, the deal is going to be, deal is important as well, but I think it's important to find out who's actually will be running, because you can have a great smoking deal in the great hot market, but then the person that's in charge of executing the plan, operating it, doesn't have the experience, doesn't have the track record, doesn't know what they're doing. That deal is just going to go, it's going to go crap, right? You can have like, I got a house in San Francisco, but I messed it up. I went over budget. My contractors left me. My tenants left.
Foundation had issues.
Yeah,
I didn't know it had issues.
Yeah. Oh, I didn't know I can raise the rent a lot higher. I put it like the minimum rent. It's a lot of stuff can happen, and you just got to know. Which I find it. I keep bringing this on the other episodes. I find it ironic that people can just invest in their 401k, but do you know who's responsible for your money? Who's controlling it? Do you know? I don't know. That's why I'm like, people are just so it's just a different mindset, I guess. But I don't know. I concede my time, I guess. What do they say that?
My answer is the same, dude. Like I think it's funny though. There are some investors out there that are looking for like the best deal and the best asset, and they're not necessarily considering, how much influence the sponsor has on the deal too. Mm-hmm. So I think because people are, again, if you get into the syndication space and you're getting like 20 OMs a week, looking at all these numbers, you're like, you have different expectations. You're like, oh, I want 25%. I want 22%. It's like, I'm looking for the best deal. But at the end of the day, it's like, who is actually running the deal?
Yeah.
And do you know them? And do they have a track record? Are they experienced? Is this their first deal? Is this their 20th deal? So yeah, at the end of the day, from an LP standpoint, if you're investing your money in someone, you have to trust them fully, and they have to, again, have that experience and knowledge to fight through any challenges. And they have to know what to look out for on due diligence side. They have to know how to run the numbers. First of all, they have to know how to, see where opportunities are to raise rents. So, and you have to trust that at the end of the day, they're going to make the best decision for you as an investor.
Yeah.
So
I'm
going to go with full. I'm going to go. Yeah. Again, the deal is important, but the sponsor is more.
Yeah. And there's different ways. I know there's I've got investors where they're kind of intimidated to set up a call with a syndicator like myself. Cause especially if they're new to the space, what questions to ask. And, I would just encourage them. No, it's nothing. It's just having a conversation like us. We're having a conversation about your investing goals. What's your experience? If you have no experience, fine. Or what I like to find out is why people want to invest. Because my wife's like my family, and we have this connection. Oh, you have kids as well. Oh, dude, this is how I'm doing it. This is my goal. I would like to, maybe that's your goal. I'd like to help you achieve that goal, right? But even before you set up that call, another way the way we build trust is, if you're on our mailing list, maybe we'll send updates, regular updates of what's going on. Check out the sponsor's website. That's one way to kind of look and see, what they're up to. Or what we do, we have a social media. Follow me on Twitter, on LinkedIn, on our Facebook pages, because we'll send updates as well. We'll send articles, and those are different ways that sponsors operators sort of can build their trust with investors or people looking to invest. Is sort of, they become sort of the master in their real estate realm. And like for me, I send different articles, post different images, and give some wealth advice here and there and so forth. That's another way to sort of build that trust is follow them on social media, and then you can maybe get an initial call if you're still kind of hesitant or not. So I don't know. Is there any other ways?
No, I think that's a good way to kind of explain what we think is better, sponsor or deal. I think we'll kind of wrap this up, but next episode is going to be kind of our next phase of the syndication process called communication. So kind of what happens after closing a deal. We'll talk about kind of what that looks like from a LP standpoint as well as a GP standpoint. So next episode will be about what happens after the deal closes.
The phase 4 is once you sign those documents, you wide your funds. Congratulations, Tyler, we closed a deal. You're an LP in deal so and so and so. Now what?
You're gonna be rich the next day.
Now go sip margaritas at the beach because your GPs are doing all the work for you. You're welcome.
So related to beaches, Sherwin, here's a question for you.
Oh, is this our fun part bit?
Yeah, we'll call it that. This may not be that fun, but are you just if you could live at the beach or the mountains, what do you choose?
Beach, dude. Come on, dude. I'm biased,
bro.
Okay, wait. What do you mean? Like, wait. Live on the beach, like
you have a house,
or have a view.
No. House on the beach or house in the mountains.
Oh, house on the beach, man. Come on, I'm biased.
It wasn't that fun because I knew the answer, and that's also my same answer
man,
too.
You can take the island from the boy, but not the boy from the island. That's
all right. I got one more question.
How about you? What about you?
I told you it's the same beach. Dude.
Oh,
but
that's boring.
No. And I used to go to Hawaii every year. Back in the day, like in high school, just growing up, and I love Oahu.
Yeah, so I guess, or would you rather have a rental property, the view of the beach or view of the mountains?
That's tough because when I think about the beach, I think about there's going to be some deterioration.
Yeah, see, thinking like it. Yeah, see, look at this guy.
It gets sandblasted, dude. The sand will blast all that paint off.
Yeah, so, you think of the weather.
But then the mountains also bring snow, which is not horrible, but could be some more water issues.
Or maybe it's a nice view in Oakland, up in the hills. You have a nice
I'll probably take
of the Bay Area.
I probably would take that because I just know that like the beach can mess up your property, man.
From an investment. So I guess, and it depends on, I guess, your strategy, because the beach will probably be, well,
More of an
not.
Airbnb, maybe.
Yeah, I was gonna say that, but then
Yeah.
mountains could be the same thing because they like the view, and I guess depends on it's just so many variables, right? The
There's a lot of
market,
variables.
what people like. But
Okay,
anyways,
but
sorry,
my
what
last question then is,
Yeah.
okay, and I think I already know the answer to this one.
what? Well, you asking me
Would you
questions. I already know the
would you
answer.
rather have 100 single family homes
No.
or a 100 unit property?
One. Come on, dude.
Hey, but hey, look, I asked that on Twitter, and it's funny.
Yeah.
I've asked that a couple times on Twitter. I usually
Yeah.
do it like once every 6 months just to see what happens.
Yeah.
And it's funny because I'll sometimes have the overwhelming, oh, no way I would own 100 single family homes.
Yeah.
And then that just like fuels the fire, and everyone's like, yeah, I totally agree. I would take the multifamily.
Yeah.
And then one time I asked the question, and it was overwhelmingly everyone was like, I want the single families. I want the single families.
Yeah.
And they were like, well, because you could, I don't know, man. It's just funny how there's different answers. So it may be obvious to us, but well, clearly there's people that think differently. So.
Yeah, I mean, we're biased. I
we are biased. We're in the multifamily
I rather
world.
take that 100 unit, but in response to that, your question, there's no right or wrong answer.
No.
It depends on the investor's goals. Especially what are they comfortable with?
Mm-hmm.
Because I've heard, that's not an uncommon post I see all the time. There's an argument where they're like, well, single family homes have better quality residence,
better quality residence,
multifamily, and that's not. It's not. It's true, but it's not true depending on your market.
Proven. Yeah.
Right. The argument's like, what do you want? Like 100 different loans? I can just get one loan, or 100 roofs.
100 roofs.
Management. Yeah, more management. But then the resident profile of multifamily is more management, which I think is opposite because when the economies of scale and so forth. But it depends on everyone's preference. And they can also say like, oh, single family homes appreciate a lot higher than a multifamily home.
That's the argument I've seen too.
Yeah. Hey, you have 100 homes in the Bay Area. You're rich.
You're balling.
But if you have 100 unit in San Francisco, maybe you're richer. I don't know. It depends. And a lot of people they feel more comfortable, and they say like the resident turnaround in a single family home is a lot longer. There's more families in there versus like a multifamily where it's usually the bachelor
turnover
couple and more turnover there. So there's only both. But then, for me, I'd rather take the economies of scale and take the one unit. What 100?
The one property, the one asset
unit. But hey, let us know. What do you guys
comment
think?
below? What would you rather have? 100 single families or 100 unit property?
Yeah, that's good. We should go over like in the future with like your would you rather question. You tweet some pretty good would you rather questions that make people think. And I know you just like to cause drama and stuff. But,
that's my whole I am the drama king.
No. Yeah. No. Well. It was a great episode, man.
I think that wraps it up. We went over the 5 steps. We had a couple fun parts.
Yeah.
Stay tuned for our next episode.
Yep.
Don't forget to like and subscribe. We appreciate the support. If there's anything that you guys want to see or hear or learn about, be sure to comment or email us. We have our email in the description box below too. So
yeah, and I hope everyone's enjoying the show. Hope it helps out. I've got some comments from different viewers that they actually find value in our show, which makes us feel good because if we, that's the number one reason why we did this, right? To just share our stories.
Nope. We did this to talk about triangle hats. That's why we started
triangle hats. And I just want to find out what's going on with Tyler's life. Cause I'm living vicariously through his, his
bachelor life,
his young bachelor life,
Well, no, but the funny thing is like, we used to do somewhat routine calls and it's like, why don't we just record them? So
yeah.
It's, I find it's always a fun time to talk to you, Sherwood. So.
Yeah. We gotta do this in person.
I know.
Maybe the next couple episodes.
Maybe
we have
put together a meetup, man.
Yeah, we can do a meetup where we can do kind of like a live show and have people, reluctantly become guests and talk about what they do. We will have guests. I know the first 5-10 episodes just Tyler and I chit chatting away, which hopefully you guys enjoy or not enjoy or whatever. But we'll have guests eventually. We just want to kind of tune up these first couple episodes so you guys get to know us a little bit better and know, like, and trust us.
Also, if you're in the Bay Area, let us know in the comments if you want to, get together and have a meetup. Show your interest by leaving a comment below. We'd love to see who's from the Bay Area out there watching us. Yeah, well, great show, Tyler. That was great. So tune in for the next episode, and don't forget to like and subscribe. And it's been real. I was
Hey, we
waiting
did
for you to
pretty
go,
good.
but
Yeah.
it's been real.
Yeah. And, take action, jump and take flight, guys.
Jump in and take flight.
Yeah. See you
Cool.
guys.
All right. See y'all.